Hello, hello, my friends. Welcome back. Today, I am here to talk to you about bookkeeping basics. We are going to talk today about debits and credits, which is an accounting term that confuses a lot of business owners. So I want to talk to you about that. First of all, for those of you that I don't know, my name is Christy Varner. I am a 25-year CPA and business strategist. I help small businesses get from where they are financially to where they want to go. For some of you, that means taking your financial statements and helping you forecast and create and implement strategies. For others of you who are more in the beginning stages, it means helping you create a solid financial foundation, because without that, you cannot get to where you're trying to go. So I love helping entrepreneurs of all different stages, whether you are just starting your business or you've been in business for 10 years. If you're a 5-figure business owner or a 7-figure business owner, I'm here to help. So today we're going to talk about debits and credits. So what I find is that regardless of whether or not you are a very small business owner or you're a larger business owner, you may or may not understand the words debits and credits. And let me tell you quickly what it is, why it matters, and how you can remember that. So we're going to talk about those three things. Debits and credits are just accounting terms. So why it matters is that in accounting, we do what's called double entry accounting. And double entry accounting basically just means that every time you record a transaction, you have two sides to it. So we're going to talk about my AirPods. Okay, these are my AirPods. I don't know how many of you have AirPods, would love to know. And as you're jumping on, whether you are live or on replay, I super appreciate you being here. I would love for you to subscribe if you're on YouTube, or join us in Small Business Finance Simplified, a free Facebook group that we have for small business owners. If you haven't joined that yet, please come join. victoryadvisory.com/FB group gives you information and you can register. So my AirPods right here are made up of two different AirPods, right? Two of them. Which one is better? The right one or the left one? Okay. Hopefully you got the answer right. I don't see any comments yet, but hopefully you got the answer right, which is there is not a better AirPod. They go together. These two go together. That is very similar to double entry accounting. So in double entry accounting, what happens is every time you have a financial transaction of any kind, meaning that money is going in or out of your business, no reason to make these be big, hard words. That's just money going in and out of your business, flowing in and out. Then it affects two things, just like you have two AirPods, right? One is not better than the other. Debits are not better than credits, and credits are not better than debits, but people will confuse you and say that. So let me just tell you that what they are is they are equal parts to a transaction. So in accounting, every time something happens, you have both a debit and a credit, two sides of a transaction. So for example, when you are buying something, so let's just say that you bought QuickBooks software, for example, you would spend money, you would spend cash to use that, to do that. So that would be one side of the equation. The other side is that you would need to know, what did I do with that money? So that would be an expense, and it would be your professional fee expense for your accounting software. So you can see one of those is a debit. In this instance, it's the expense, and the cash would be the credit. But it's just two things. It doesn't mean that it's bad that you use the cash. It takes spending money on expenses in order to run our business. Nobody runs their business for free. So they're both necessary. So I just want you to get in your head, when people are talking about debits and credits, it's not that you want to be all debits or all credits. They're equally offsetting. That's why a balance sheet is called a balance sheet. What it means is you're in balance, which means all your debits and credits balance out. They equal to each other, which every transaction has to. It's like the yin and the yang. It's like my AirPods. They have to equal, right? So if $1,000 gets spent on something, then $1,000 has to be recorded on the other side. So just think of it as the AirPods. But what I want to tell you is a quick way to remember how you might think of debits and credits. I saw this, someone taught this on YouTube, and I was like, wow, this is a great way to think of it. And I just loved it and thought it was simple. So I wanted to share it with you. So if you will think of it as credits are the sources of money. So a credit might be sales, right? That would be a source of money for your business. Another source of money could be a loan or some sort of capital infusion. So loan from a bank, investor money, you drew on the line of credit, whatever. Or you as the owner or investors put money in. So all of those would be credits that would increase your credits that because it's a source of money for the business. And then a debit would be your use of money for the business. What did you use that money for? So that might be an expense like QuickBooks. That might be purchasing an asset. Say that you need a car for your business or whatever. That would be a debit to your business. So that is a quick and dirty on that. I will also say a source of your income. While I said that would be like money coming from a bank, that becomes a liability. So I hope that makes sense to you. But so your sources of money will usually be loans, sales, and equity, you putting money in. Your debits, which are going to be the uses of your money, are mostly going to be expenses and assets. And then any money you take out of the business is like a dividend back to you as an owner. So I hope that helped clarify things for you. There's no reason that accounting and finances need to be complicated. It's truly as simple as AirPods. So your takeaway is debits and credits equal each other. One is not better than the other. Every transaction is recorded two ways, as a debit and a credit of equal value. That's how they balance on the balance sheet. Credits are sources of money, so how we get the money in. So that side would be usually revenue, loans or financing of some kind, or an owner putting money in. Your debits are going to be typically uses of money. So you're spending money on expenses or purchasing assets or taking money out, dividends out for the owners. So I hope that helped. I would love to help you understand small business finances. There is no reason that this needs to be difficult. I am here to make this simple because your success is my goal. If I can help you in any way, we at Victory Advisory Services offer everything from bookkeeping services to accounting, and then on to my very favorite, which is strategy, helping you achieve your goals by looking at those financial statements. So thanks so much for joining me. Please say hi in the comments, drop your questions. Please let me know what other financial topics you would like us to share with you, because we want to help you make this easier for you. So thanks again for joining us, and we'll see you on the next episode. Bye for now.